Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and I'm coming out very early for my update. And this is Friday, the 5th of August, 2011, around 1:40 in the afternoon, which I thought was a good time today to do it because we're such a wild, wild market. The stock market's got a little bit of green going, which is good. It's been a big volume day. It'd be nice to see the market close on a positive note, but I don't know. I got my own doubts about it. What rescued the market today is that the European Central Bank is starting a program, at least the announcement of it, where they're going to buy Italian debt. They're going to step in and start buying Spanish debt as well. Where they're going to get the money to do all this and how they get it about, I don't know, but that'll be worked out probably between France and Germany. The key is there's a rescue package, and guess what? It's going to follow very much what the U.S. has done with our quantitative easing. Next week, Uncle Ben Bernanke speaks, and I personally am expecting the wording to come out that we're ready to start another form of a stimulus program. Not certain what it is, don't claim I am, but we're not getting enough out of the job growth. We're stalling out here. We're at 9%, 9.1, today's numbers. They're not in the 200,000 range you need to really get this going. And I think that the world events are such that the timing is probably right for us to consider that other stimulus. Now, I'm all by myself in saying that. I don't have an in with anyone, but I have thought, as you all know, for a long time, we're nowhere near through with the stimulus. We'll see. The bonds, I want you to look at this high. It's not a misprint. We got up to 135 today. We're back to 132.11. We're back under the Bollinger Band as well. So I to say that didn't expect this would be wrong. I'm expecting the market to get back under the Bollinger Band. Let's go to the gold market and see what's going on. It's up 280 at 1661.80. That is good. Market is acting well. You don't have a pattern yet where you've got anything wrong in the chart. In fact, when you look at the chart, you can't see a pattern, but when I put on the swing line, you certainly can. And the market's got a pattern clearly of higher highs. Whatever this break low turns out to be, so far it's above the 1608.20, which was above 1605. So it's a classic bull pattern of higher highs and higher lows. The 18-day moving average of closes is at let's call it around the 1617 level right now. So that's acting pretty good because that's above the 1608.20. The 45-day and 100-day moving average of closing prices are also below the market. So I can argue very strongly that there are layers of support under the market and that the seasonal at the end of July through the end of December typically is one of upward momentum, and I can argue that I think that the world fundamentals are such that that won't change, and that's where I am sitting. I see the fundamentals getting worse, not better. I see countries monetizing debt, which gold looks at as a storage of value, and it's a buffer against it. I see all these things, so I'm bullish. Plain out, just bullish. I also see the market as being ahead of itself a little bit. Keep in the back of your mind that we only had the surge the past 2 days, and the market's given that up fairly fast. The Bollinger Band top is 1667.30. That's this black band. This is the bottom band, top band. The idea behind these bands are they're an algorithm designed to keep the market trading within them 95% of the time. You don't want to go to 100% of the time because then they'd never hit the band. So you want the market mathematically to be able to hit it or be above it 2.5% of the time. Same thing on the downside, so you have ideas of where theoretical resistance in the market is. And that's what this is. It's theory. Well, it's been holding up pretty well. That's nothing bearish there. Here's where I'm bothered, and I admit to being bothered now. You get all this and it looks great, but the momentum of the market is down to 78.56. We already have gotten past the New York time frame where the close is in Chicago, 12:30 Chicago, 1:30 New York. So it's going to be a bit lower than this. Now, let's just take today out. Yesterday, which was Thursday, you lost your embedded stochastic. Closing right against the Bollinger Band. I told my clients this in the evening update that they should get out of their remaining longs at that point in time. I feel bad not having a toe in the water, but you've lost this momentum, and so far today, the market has still lost that momentum. So the question is, it either regains it, or the market could pull back here to wherever that 18-day average is, and that's where I'll look for the potential of coming back in the market, at least in terms of a recommendation for my customers. In looking at silver, silver's got a big problem. You hit the Bollinger Band top and now the Bollinger Band bottom. So what I expect to occur is this to narrow in even more. I'm not looking for it to fall apart to the downside. The momentum is down here. You're going to probably hit oversold territory with any further decline on Monday. That could happen. But silver's torn. Is it a copper-type market, industrial, or is it got the gold still as the poorer man's gold market? And that's what it's called. I don't mean anything negative by that, but that's exactly what it's been called for years. Well, that's pretty much what's going on, and it's losing quite a bit of value today against the gold market. The copper market, look at how this market's just pulling. So you're going to take these Bollinger Bands and just whack them out. So you're a couple of days now under them. You can go a little more under them, but I expect the flattening out of this band as the market comes into the support right over here. You're no more than, I'd say, a couple of pennies before you're entering the support level. And between here and $4, I'm looking for solid support to start showing itself. So I know where the trading top is, and I'm going to guess it's going to come in near the $4 level to end all that. Let me turn off my phone here so that it doesn't bother everybody, and I think that will be the key. There we go. All right. Here's the crude oil. Look at how it's falling apart. And remember when I was telling you, you keep your eye, the longer a Bollinger Band, these black bands, go sideways, the bigger the move. You've made a major top in the energy market. And I think it'll be very difficult for WTI crude to get back up and over $100 an ounce for a while. The market is now in the area where it's the most oversold, but if this locks in and embeds, you'll come down a bit more. What I'm thinking is happening is we've extended the trading range now from 100 down to the 85 area. And we're looking to see where that bottom area comes in. And it favors that it's going to be in this zone. Why? Because you're now 3 days in a row under the Bollinger Band and staying more than 5. Not likely. So I'm looking for this area to try to prove that it's a value. Does that mean it's a buy here? It's definitively not a buy here. Let it prove itself. Here's the gold-silver ratio. Remember, I mentioned to you just a minute ago that I thought this was going to take off in favor of what? Because the silver was down $1.29 in favor of the gold. But it hasn't come out of this general sideways action. This market's been trading between 40 and 45 ounces for the longest period of time since May. And we're just doing that right now. It tried to go in silver's favor, got thrown back today decisively, but it doesn't mean that it's in gold's favor yet. This is just back and forth action between the ratio of the two of them, and this may be the new norm for a while. It's very hard to tell. In the S&P weekly chart, I just got to show you this. Look at how bearish this is. This market on the weekly really pulling itself down, not even into oversold territory. Rebob gasoline plunged down today, oversold. You know the market it's going to race for. Look at the black line, 283.16. You're 280.35. This market's going to try to get up to that number and stay close to that in the meantime. Brent, it's going to try to get back, I think, to 110. The Bollinger Band, and hang around that bottom for a while, but there's nothing bullish on these charts whatsoever.